Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, and we will connect and try to get that answers live from our experts too. But before that, let's have a look at what the markets are up to. So Cheryl, that's the almost a muted sort of an action on the Indian markets right now, and that's the Bank Nifty that is putting pressure.
Absolutely. A very good morning to you, Shrishti. But if you look at the way how the market setup is looking like, pretty much as expected, because you had the SGX Nifty that indicated that, I beg your pardon, GIFT Nifty that indicated that we will be in for a flattish to positive start. And that's exactly how it's transpired. 0.2% uptick coming in for the benchmark indices. Heartening to note is the fact that Nifty is still above the 19,500 mark. In fact, it's inching closer to 19,600. Talking about Nifty Bank, yes, that one is under pressure. It is underperforming the benchmark indices. As we speak, it is in the negative territory. But taking a look at which are the gainers and the losers on the Nifty at this point in time, we have Apollo Hospitals, that's top gainer on the Nifty, followed by BPCL, ONGC, LTM Mindtree as well are the other counters that are gaining in trade today. While on the flip side, you have NTPC that is actually seeing some sort of a subdued subduedness in today's trading session, is trading low by about 1%. You have Dr. Reddy's, Tata Steel, Ultratech as well as Hindalco. They are under pressure in today's trading session. Remember, yesterday metals were on fire, and today they are taking a back seat, with the metal index being among the top sectoral losers. 1.2% down tick, and yes, taking a breather from yesterday's sharp rally. You also have a bank index that is in the negative territory. But apart from that, all the other sectoral indices are in the positive territory, with the media index gaining the most, 3.5% uptick coming in for media index. You have realty index that's seeing good gains of 1.3%. PSU bank index up 1% or so. But if you look at the broader markets, remember the broader markets are charting their own course at this point in time. And today itself, they have hit a fresh record high level as well. Both mid cap and the small cap index, both of them at fresh record high levels. In fact, they are at the day's highest point. So that's the way how the markets are transpiring at this point in time. Actually, Shrishti, if you look at the markets, yes, seeing a shade of green.
Okay, but a shade of green is also there on IEX, so let's shift focus on that as the company has come up with its operational update for the month of August. And this time around, we have seen a decent jump coming in, wherein the company has achieved 8,469 mega units of total electricity volume, and that's a jump of 21% on a one-on-one YOY basis, and that's why a jump on the stock price as well. But just let's understand the dynamics going ahead and what is the outlook. For that, we have been joined by Rahul Bajaj, Executive Director, Business Development Strategy and Regulatory Affairs of IEX. Hi, very good morning, Rahul, and thank you so much for your time to ET Now. Firstly, onto the jump in the volume, because the power sector has been in focus in terms of demand, in terms of the pricing. So as an exchange, how are the demand metrics panning out for IEX? And going forward, do you expect this momentum to continue, and any number that you can share us with?
Yeah, very good morning. Just one correction here. I am Rohit Bajaj, not Rahul.
So, I beg your pardon. Rohit, please go on.
Yeah. So this particular month, in the month of August, we registered 22% growth in the electricity segment. And if you see, starting from April this year, this number is ever increasing. In fact, in Q1, it was about 7-8%. July, it was about 17%. And now, in the month of August, it increased further to 22%. So there are a couple of reasons. Demand is very robust in the country. In fact, if I talk about August particularly, we have seen 16% increase in demand, overall electricity demand in the country. This is unprecedented increase. There are various reasons for that. One of the reasons is very big dry spell in the month of August. This was one of the driest and warmest August in last 122 years, which resulted into increase in demand, and other economic factors also playing their part. And in fact, till now, YTD, we are 5% plus. So that's on the buy side. Supply side, there is huge buy which is coming to the market, but there are issues on the supply side. Supply side constraints are still there. We have seen correction in the prices. Our e-auction prices have come down in India, domestic coal prices. We have seen imported coal prices have also come down drastically in last 4-5 months. Gas also, we are seeing some correction, but still on the capacity side, there are constraints. And the growth is only 22% because we had supply side constraint. Otherwise, this number would have been much, much bigger.
Right. Good morning, Mr. Bajaj. This is Cheryl also joining in the conversation. And let me just shift focus. We will come and touch upon what are the supply constraints. But we understand the CERC has initiated a discussion on market coupling with the staff paper. Two-part question. One, I want to understand how have the initial conversations and feedback been for this? And also, what sort of a timeline are you envisaging for a final approval for this particular move?
So this is a long drawn process. When we say market coupling, it is about new market design. So one design which we have been following for over 15 years that is proposed to, now they are proposing to change it, but there is a process involved, and CRC has just initiated it. So there was one staff paper which has been issued about 2 weeks back, wherein they are talking about all the possible pros and cons of design change. They have clearly mentioned about the global scenario, where else in the globe we have seen such market coupling. They have captured in that paper example of European market coupling, which was more about integrating different countries into one big market. So in the Europe, market coupling was done to take advantage of the diversity of resources, diversity of different energy mix across different countries, and they added different geographical areas. They integrated the market to create a one big market. But in India, these things are not applicable. In India, what we are discussing today is it is coupling of exchanges. So all these aspects have been discussed in detail in that paper. It's a very beautiful paper, very nicely written paper, where they have touched upon all the benefits and what can go wrong if you do that. Because they mentioned in that paper, suppose we do that, then the innovation which is happening in the power market. Today, exchanges are trying to create new market segment. They are trying to understand requirement of the participants, and then figuring out how technology can be helpful in creating different new product segment. So probably that will stop. It will make the system more centralized. It will make the system more rigid. Flexibility will not be there in the market if you go for market coupling. I think all these things are to be dealt in detail, and rightly so. CRC has invited comments from all the stakeholders. 30th September is the last date for comments. We expect everyone, whosoever is concerned, or all the participants will be giving their comments. And in due course of time, on the basis of merit, decision will be taken by regulator. And if in case of decision also, there are many things which are to be done. First, draft regulations are to be created. First, we have to finalize the comprehensive framework, how coupling will look like. If at all it happens, then who should be operating that, where there is a single operator, or exchanges would be doing in rotational basis. All those things are to be decided. So first thing first, whether it is required. We believe that today it's not the right time. We are still a very small market. Only 7% of the transactions are happening through exchanges. Remaining 93% has got various different prices. So if you have so many prices, so many different prices, there is no purpose we are going to solve by combining different exchanges and creating a one single point. So it's a debatable thing, and I hope going forward on the basis of merit, decision will be taken. And in either case, it is a long drawn process since it involves design change. There is a lot of things which are required to be done.
Thank you so much for sharing your take on market coupling. That was indeed one point that the markets was looking ahead for. But on the back of this, there were concerns about you losing the market share. So for the month of August, can you share the update on the market share and the trend of declining market share? Has that been arrested?
Yeah. So our market share is last year it was 87%. This year also till now it is about 85, 86%. And initially, in the months when you have more time transaction, it is little on the lower side, and later part of the year when you have more participation in the dam, it increases. Same thing happened last year. This year also we expect same thing to happen, but it is hovering around a similar level, 86, 87%. We have different segments. In fact, there are collective transactions, which are day-ahead market and real-time market. There our market share is close to 99%, in fact, more than that. And in term ahead and other certificate segment, it is about 50, 60%, depending on the different market segments. So more or less, it is at a similar level. And we expect going forward, other exchanges are also playing their part. They are also innovating. They are also trying to introduce new product. And we expect that we should be able to maintain or increase this a little bit more going forward.
Right, Mr. Bajaj, let me actually talk about the overall volume growth targets that you have set for yourself for the fiscal year. Double-digit volume growth is possible in FY24 given the fact that we have seen a sharp increase in the demand, but supply remains a constraint, isn't it?
Yeah. So as the supply is increasing, we are seeing volume coming up. In fact, cleared volume, the volume growth that we say, we have seen that. As I mentioned in Q1, it was 8%. Q2 till now, it is about 20%, 17, 18% in electricity. And going forward, supply side is expected to improve even further because as winter will set in, there would be many distribution utilities, many states where they will have surplus. They would come to the market to sell that, to dispatch that. So as the supply will ease out further in times to come, we expect to maintain the momentum which we have created in last 2 months, which we have seen in last 2 months. And till now also we are about 11% growth as compared to last year. We expect double digit is definitely positive and it can further go up depending on supply easing situation in times to come.
Okay, thank you so much, Rohit, for joining us today on ET Now. With this, we'll let you go on that and wishing you all the best for the upcoming numbers. So that was the management. Yeah. So that was the management of IEX sharing and talking about the update for the month of August and going ahead, what sort of a market share. And he also shared his take on market coupling. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned for more.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that'll be flashing on your screen. Do remember to mention your name, the stock you're looking to invest in. If you're already invested in the stock, then do mention the buy price, the quantity, as well as the time horizon. And that way, our experts will be able to help you better. Talking about experts, today we have Kunal Bothra as well as Rajesh Agarwal joining us on the show. A very good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on ET Now, on Buy Now Sell Now. And let me start taking the queries. Then the first query that I have is coming in from Divya, and she is a new investor. Kunal, for you, this query is, she wants to know whether for ACE as well as KSOL's India, she wants to know both of these counters have seen an uptick have seen a downtick of approximately 15% over the last 10 to 15 days. So she wants to know whether she should hold or average these counters. 6 months time frame is the time horizon. I'm not sure what's a buy price, and for the fact that she's asked what sort of a strategy she should have, whether it should be hold or average, which means she's already purchased these counters. I don't know if you track KSOLs also, Kunal. So ACE, what's your take on this?
Yeah, I don't track the charts, but then for KSOLs as well as ACE, the charts are a bit similar because in the last, I think, 1.5 odd month, or I think less than that, these stocks have fallen in around 10 to 15% broadly. KSOLs, I think, has corrected from 1300 or 1440 mark towards now 1040 levels. So the correction is more than the regular 10 to 15%. But again, on the charts, I think just because of the recent sell-off, the indicators are a lot more oversold for both of these names, ACE as well as KSOL. So you could probably expect these stocks to get into a process of a bounce from current levels. But then the point is that whether you want to participate on the bounce, of 4-5% or broadly for these stocks, or you want to buy these stocks when there is an actual bottom formation happens for these stocks. I believe that process could be at least another month or away for these names, because we've seen typically that when stocks fall by such magnitude of 10-15%, an eventual bottom gets formed after 3-4 weeks of the first round of sell-off for these stock prices. So if you are a medium-term investor, I would suggest to stay, just hold on to the stock, not to average at current levels. But if you're looking to play for a bounce, and assuming if you don't have any holdings, then you can start buying at current levels.
Okay, that's the take on ACE. But moving on, and Rajesh, coming to you for this one. This query is from Javi from Kerala, and he has bought data patterns at a price of 2,127 rupees, sitting at a mild profits right now. Should he continue to hold on or exit this particular name? And if you are suggesting to hold on, then any targets on the same? And he also wants the take on IRFC. The stock has been on the roll, so any targets on the same as well?
Good morning, Srishti, Sadil, Kunal. As far as IRFC is concerned, I think one can continue to hold. The company has been doing very well, and with the kind of projects railways are coming out, I think this company has many higher targets to come in the near future. Maybe there might be some amount of correction because of the kind of run-up which we have seen in the recent past, but that should not be a concern for a long-term investor. And as far as data patterns is concerned, I think it's a very good company, has great fundamentals. For a long haul, this stock can go up to 3,000 rupees if somebody holds for a year or so.
Right. Kunal, next one coming for you. This one's from Sushila. Wants to know about Ashok Buildcon. Already bought the stock at price of 102 rupees per share. What sort of a short-term target do you have for this one?
So I would suggest keeping a trailing stop loss of 99 on the stock price, because it's forming a bullish pennant formation on the daily charts, and the support of this pattern is around 99 mark. So I think that 98.5 to be precise on the stock. And on the upside, if the pattern gets completed, you could be looking at 12 rupees from 103 as a breakout. So maybe 115 could be a target which you can assign for the stock price, and 98 and a half could be a stop loss for this trade.
Okay, moving on. And Rajesh, this query is from Raja, and he has bought JP Associates 500 shares at a price of 14 rupees. He entered this particular name long back is what he's saying. So at this point in time, should he continue to hold on, or maybe he can average? Any take on this counter?
See, averaging or buying new at this point of time in any kind of any of these penny stock is strictly avoidable. I don't find any reason to believe why one should buy JP Associates. All the numbers have been bad, it's being in losses from a pretty long period of time. One should take this rise as an opportunity to exit. So if you are comfortable booking 1 or 2 rupees loss, exit the stock.
All right, Kunal, this one is from Purnima, writing to us from Bangalore. She has fine organics at a price of 4,190 rupees per share, which is up now about 19% from her buy price, is what she's saying. So she wants to know whether it's a good time to sell off and look to invest that money in DLF.
Well, DLF you can invest even without selling fine organics. I strongly believe that this real estate major looks very attractive from long term. I think I've been suggesting the stock since quite some time earlier. Now, fine organics, I think it's at the cusp of a reversal. Now, the stock in the last 4 weeks, 3 weeks has been showing some good strength from 4,500 levels to now on the verge of coming closer to that 5,000 mark. The previous swing high for fine organics is around 51.25. Now, the fact that you're already sitting with a 15% odd kind of a profits, I think you should wait out for maybe another round of 100 rupees up move for the stock price. Let it retest the previous highs of 5100 and then judge that whether the stock has that strength to break past about those levels. If it happens, then you could be looking at a much bigger target for fine organics. So maybe keep a 5%, 7% trailing stop loss, and then look out to for the stock to hold on to the stock to retest at 5100 levels. If the stock breaks past about those levels, you can have even bigger targets of 5800 to 6000 for fine organics.
Okay, moving on to the next query then. And Rajesh, Kiran Bedi has bought 1500 shares of SKM Eggs at a price of just 65 rupees, and I want our producers to show a 1-year chart and look at the move in this particular name. That's almost been like 8 to 9 times for him, and today itself the stock is actually locked at an upper circuit of 5% and now trading at 560 odd rupees. So what's the advice going ahead after such handsome profits? Should he book profits at this point in time or continue to ride the rally?
See, we initiated a coverage on this company around 140, 150 odd rupees sometimes back. It was not very long period back. Sometimes back, it's a Nellore-based company operating into eggs and all. The point is, the stock has been moving circuit to circuit from the last so many days, and it has reached 560 odd levels. I think it would be prudent to book some amount of profit, at least the capital which you have invested. Take out that and continue with the stock. Although the fundamentals are intact, but still with the kind of circuit to circuit it has moved, that it becomes one becomes spectacle. So sometimes if it starts moving down, again it would be circuit to circuit. So it's better to take your capital out and ride the journey.
This one is coming to you once again, actually. This one is coming to you, actually, Kunal. I'll take it to you. Given the fact that Vinod is asking a long-term query, he's writing to us from Dubai. It's his birthday today, and he wants a suggestion from you for stocks that he can look to keep in his portfolio for the next 3 to 5 years, at least 2 to 3 stocks. I told him I will take the question to Rajesh, but he's pretty much your fan. He's told me I always follow what Kunal is told. So I'll grant him his birthday wish then, Kunal.
Wish you very, very happy returns of the day. Now, in terms of the stocks, which if you're looking at from a 3 to 5 year perspective, I would probably concentrate on few mid-cap names, and there are hardly few mid-cap stocks which have not rallied. So you'll have to take it with a pinch of salt that these stocks have already rallied. Most of the stocks have already rallied 20-30% odd. But I think IDFC First Bank looks to be a top favorite in that mid-cap category from my side. AB Capital is something which I've been highlighting time and again. I think the stock has now come back towards 190 mark, 190 or thereabouts. For AB Capital looks very attractive for the next 3 to 5 years. If you're looking at something from the non-financial space, I've been recommending Devyani International and Victor Foods. I strongly believe that for maybe the next 3 to 5 years, the prospects look very attractive for these names. And the last, which you can probably look out for, is DLF, even from current levels of 500.
Okay, so those are the top recommendations from Kunal. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And to answer the same today, we have Kunal Bothra as well as Rajesh with us. And moving on to the next query then, and Rajesh, this one is coming from Dinesh from Nagpur. And he's holding 400 shares of 5-star business from a price of 585 rupees. His time horizon is to stay invested for the next 2 years. So at this point in time, when he's already having decent amount of profits in this one, so what should he do? Continue to hold on or book some profits right now and maybe look to re-enter after some time? Okay, Rajesh?
When you are a long-term investor, don't try to do this sell now and re-enter at lower level. That's for traders to think about. Yes, what I was trying to say is, if you are a long-term investor, continue with the stock. Don't try to do this strategy of selling now and re-entering at lower levels, but because it might so happen that it would run up from the current market price. So it's better to stick to your long-term theories. And as far as the 5-star business is concerned, yes, it's a good stock. One can hold for a medium to long term with a target of maybe 900 plus or.
That's the advice coming in. Stay invested for the long term. That's the 2 years time horizon that you have. And Rajesh is targeting 900 rupees on this one. Let me take up the next query then. And what's your take on Trident, Kunal? This stock also has been in focus. And Hari Upadhyay from Mysore has been holding 1,000 shares from a price of 31 rupees. So can he add more at current market price? And what's the outlook?
Well, yeah, I think it's another mid-cap, small-cap name which has risen up quite steeply in the last 3 to 4 weeks. Now from 30 levels, 31 levels, the stock is already at 40 to 44 mark. Now, I don't sense that you could probably see a much more bigger breakout or such a kind of an upward move. In fact, if you bought at 31 levels, this could actually be a good time to try and book profits and then look to buy back on phases of sharp correction for the stock. I think that's a better strategy for a stock like Trident.
Alright, so that's the take coming in on Trident. We have Padma Sivarao who's writing to us, and Kunal, and also to Rajesh and all the guests who appear on Buy Now Sell Now. Padma Sivarao has wished all of you all a very happy Teachers' Day because you all are making sure that you are teaching financial literacy to each and every viewer of ET now. So his query for today, Kunal, is Renuka Sugars. Can he buy right now?
Thank you so much for that. First of all, on Renuka Sugars, I would probably recommend. So again, it's a mix of portfolio. I'm not sure what kind of mix do you have in terms of a portfolio, but I would prefer that sticking to quality names from the sugar pack because sugar is a very high beta seasonal kind of a sector. Now, if you play within the high beta stock within the high beta sector, then the risk is extremely high. So it's better that you go with a formidable name from the sugar pack. I would recommend Balrampur Chini as a much more stronger name, formidable stock in that sense from the sugar pack. And if you want something from the sugar related spaces, then I think Praj Industries should also be another stock which you can look out for.
Okay, Rajesh, the next query is also from a viewer sitting at a handsome profits, and his name is Mohit, holding 1,000 shares of IDFC First Bank from a price of 27 rupees. He wants to continue to this particular counter for the next 2 years. So, what's the outlook, and till what point and price he can stay invested in this one? Any targets for the same?
See, one can continue to hold. The bank has shown sharp turnaround the last 2-3 quarters. The numbers have been good. Previously, when it was running into losses or showing meager margins, the numbers have been shown very good turnaround the recent quarters, I would say. And one can continue to hold this bank. The merger has already been announced. That was an overhang, I would say. And Friday, we have seen GQG partners have taken a stake into this. So giving a target for a 2-3 years time, or other when the bank is on the verge of growing up, would be a difficult task. But still, one can have a decent target of 20% CAGR in the period.
This one is coming in from Nagesh from Bangalore. Kunal, this one is for you. Hero MotoCorp, he's planning to buy this particular counter for the month of September. Do you think that Hero MotoCorp is a good buy?
If you are talking of futures, then I would not recommend a buy on Hero MotoCorp for the September futures trade.
And what about cash?
Again, I mean, I sense that it's a very short-term kind of a outlook which you're looking out for, which is September series. And looking at the charts, I don't see any major momentum coming back into Hero MotoCorp. So unless the stock breaks past about the 3,000, 3,030 mark, I think you should just wait and watch for Hero MotoCorp, because the problem with the stock and with many of these auto stocks which have been lying low or underperforming is that it's very difficult to gauge that when would the time correction be over for these stocks. Sometimes the time correction can go on for weeks on a trot, and I think that's the more patience testing part. So if your time horizon is restricted to a short term, you should avoid Hero MotoCorp at current levels by only about 3,030 mark.
Okay, another auto name we have been discussing a little bit about, Kunal, is Samvardhana Motherson. Ramesh from Delhi has bought 1,000 shares of this counter from a price of 92 rupees, and finally we can see that 100 mark on Samvardhana Motherson. So, any targets with a 6-month time horizon?
I would recommend a hold on the stock, and I think with a 6-month time horizon, I would look out for 125 as a broad target for Samvardhana Motherson. But on the other hand, I also sense that the stock can go into those odd phases of correction. 90 to 94 could be a very good support zone for the stock. So if you're looking to accumulate, keep that support band as a point where whenever the stock retests this support zone for itself, you should look to add or accumulate further.
Right, this one is coming from Raj. He's writing to us from Mumbai. 2 stocks that he has in his portfolio, Rajesh. One is Garware High Tech, 101 shares at a price of 750. The other one being Vedanta at a price of around 263 rupees per share. For the long term, what should you do with both of these counters? Continue to stay put with it or exit?
What was the second one you said?
One is Garware High Tech. The other one is Vedanta.
See, one can continue with Vedanta because although it's on a negative news and all, but still with the kind of resources it has and the kind of dividend it doles out, I think one can continue holding to the stock, and not to forget the kind of metal rallies which we are witnessing. As far as Garware High Tech is concerned, I think one can try booking profit at these levels. If somebody wants to hold, can re-enter at around 1,000 or 1,050 odd levels. But at this point of time, one should book profit.
Okay, so that's the advice on both of these counters. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back in order to take more of your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this one is coming from Shafi, who's writing to us from Mysore. And he has Tanla Solutions, 1,000 shares, I beg your pardon, 250 shares at a price of 1,000 rupees per share. Kunal, he wants your advice on this particular counter.
Only Tanla Solutions, right?
Yes, only Tanla.
Yeah, I would suggest to hold on to the stock. Just very recently, the stock has shown signs of bottom formation at the 950 mark. It also coincided with a major support of a moving average for Tanla. And I think the chart structure over the last 1 year specifically, I think from the previous bottom of 550 or 500 for the stock price, it's looking very attractive. So it's gone through a rise, completed a phase of correction, and now is getting ready for a breakout yet again. I would suggest a hold.
Okay, Rajesh, what's your outlook on South India Bank? Jacob Philip from Kerala has bought shares at an average price of 24 rupees. His question is how long should he hold these shares for getting handsome gains in this particular counter? So, what will be your advice?
It's a very slow moving counter, I would say. From decades, I would say it had not done anything on the bourses except for giving good dividends. So it's better to switch to some good names in the mid cap or small cap category. Maybe a UCO Bank or a Bank of Maharashtra would be a better choice. But still, I would say South Indian Bank is not bad as far as numbers are concerned. The only thing is it doesn't do anything on the bourses.
Right. This one's come from Raghu. He's writing to us from Bangalore, and this one is for you, Rajesh. Geo Financial is the counter that he's actually purchased at the price of around 310, and 500 shares is what he's purchased of Geo Financial. What should he do with this one?
I think 310 is, if I'm not wrong, is a wrong figure because it hasn't touched that number. But still, if you are in this stock for a period of 2 to 3 years or even more than that, it's a stock for you. You should stay put. But if it's for short term, it's difficult to say anything because they haven't announced any business model as yet, apart from the announcement of the tie-up with BlackRock for EMC business or some amount of insurance business going ahead. Even they have 6.1% holding in Reliance. That's a plus point. Price to book value is lower than its peers. And for a longer term horizon, we are very bullish on this stock and we have recommended our clients to buy for a longer period of time. Short term, it's very difficult to say because we have to see the numbers and all. But longer term horizon, we are very bullish. So what I would say, stay put in this stock for 2 3 years. Don't see prices every day.
I stand corrected. I think it should be 210 because otherwise there was no scope for him to buy this particular counter. Anyways, it was getting locked in lower circuit ever since it had listed. So I think that 210 should ideally be the buy price for Geo Financial. The other one that I have, Kunal, is for you. And this one is coming in from Ravi Shankar from Bangalore as well. And REC, should he continue to hold on to it? 220 is the buy price. He's a short-term investor.
Book profits over here and then look to buy back again. I think when the stock corrects and say comes closer to this 220 mark, because I believe that REC and PFC, both of them are showing some exhaustion on the charts on the short-term basis. So there could be an odd correction for these stocks, a 10-20 rupee correction into these names. So it's best to buy back on dips or on corrections for these stocks.
Okay, Kunal, what's your take on Towson products? Seema wants to know, is this a good time to enter at current market price with a medium to long-term investment horizon?
See, on the charts, the stock has made a new low or a fresh low on a closing basis. I think on the weekly closing chart, the stock has formed a new low. Now, it's come back about that 530, 535 mark. But the concern is that the indicators have not yet shown signs of a strength or a recovery. So, even though it may look attractive that the stock is perched at a fresh support from a longer term basis, but I don't sense that you could probably go into a strong a rally or a trend mode for Towson's over the near term. The data has to improve significantly and subsequently over the next 2 to 3 weeks. So maybe in the next 2 to 3 weeks, if the prices rally and recover from current levels as well, we could be in a better state to try and expect that the bottom has been formed for the stock. As of now, I would just suggest a hold or maybe a wait and watch.
All right, this one is coming for you again, Kunal. This one, I believe, is from Indu, who's writing to us from Warsaw and wants to know about Tata Power and JSW Energy. She wants to know whether she can add some more and at what level. She's already holding both the counters. She's seeing 10% profit on both of these stocks. What should she do?
I think you should definitely look to hold on to both of these names, Tata Power as well as JSW Energy. I'm extremely bullish on the space from a long-term play. And my sense is that after 2 years of consolidation, correction for these stocks, both for Tata Power as well as JSW Energy 2021-22, these stocks are making a comeback again. So this could be a very strong comeback for these stocks and the prospects may look very, very attractive from a long-term play. So you should definitely look to hold on.
Okay, Rajesh, the next query is from Bishakha from Kolkata, and he's a senior citizen having investment horizon for the next 2 years, but he's currently holding 10 shares of Amber Enterprise from a price of 2,030 rupees, so sitting at a profits in this one. And he also has 20 shares of United Spirits from a price of 844 rupees. Should he continue to hold on both of these counters, or maybe book some profits at this point and rather make a switch to Tata Investments and Rolex rings at current price?
There's no point switching from these two counters to Rolex Ring or Tata Investment. If you have extra capital, then you can always invest in Tata Investment. But since you are a senior citizen, I won't suggest investing in Rolex Ring. Otherwise, it's a good company. But being a newly listed and a mid-cap space, it can be volatile at times. As far as your investments in these two companies, United Spirits is concerned, I think it's a long way to go. It's a good company with good sort of brands. 1,300, 1,400 odd levels in the next 2 years is quite possible. Continue to work.
All right. This one is coming in from Sri Krishna from Hyderabad. Kunal, this one is for you. IOL Chemicals, 100 shares at a price of 450. Should I hold or sell? Should he hold or sell? 100 shares of IRCTC at the price of 640 rupees per share. What's the short-term upside for IRCTC?
So IRCTC, I would look out for at least 770, 780 as a target for the stock. And by short term, I'm assuming that it's 1 to 3 months for the stock, because the stock would take that much of time to come back to that 800 odd levels. Looks attractive. Even for IOL Chemicals, you can continue to hold on. I think on the monthly charts, the stock is on the verge of a multi-month breakout. I think the previous high for the stock was around 470. It's currently at 462. So if the breakout gets confirmed on a monthly basis, we could be looking at a strong turnaround for IOL Chemicals. So both of the stocks I would suggest a hold.
Okay, Kunal, the next query is specifically for you from Ron, and he would like to know your thoughts on Spandana Spurti and what's the outlook for the short term for this particular name.
It's a very high beta stock. I remember, I think there was a phase for tracking the stock when the stock used to move some 10-20% in just a matter of few weeks. Right now the stock has gone through a consolidation. So that first part is very important to note, that it's a very high beta stock. So in case if the stock, or you get into the wrong end of the stock, you have to be ready for a sharp drawdown. Now with that caveat, if you can look to buy the stock at current levels. It's come back towards the 50-day moving average. I think it's closer to 778, the 50 DMA. The stock is at 800 odd levels. So you can start buying the stock at current zone, because it's come back towards the consolidation or the support of the consolidation as well as the moving average support. So could be a very good time to buy the stock if you're a high risk as well as a short term trader.
All right, with that, let's kickstart with a rapid fire. Then Rajesh, the first one is coming to you, and I'm not sure if you tried this one. Drone Destination, 2,000 shares of 65 rupees per share. Vishwanathan Nair wants to know what's your outlook.
No, I'm sorry, I don't track this.
Okay, Kunal, what's your outlook on SJVN? Poonam has bought 500 shares from a price of 31 rupees.
You should book part profits at current levels.
Okay, this one is coming in from one of our viewers who wants to know about UPL. What's your take, Rajesh? Can you look to buy UPL right now?
No, buying is not suggested. If somebody is holding, can hold.
Okay, Rajesh Ravichandran from Chennai wants a 2 to 3 year outlook for TVS supply chain. He has bought 300 shares from a price of 200 rupees.
You can hold to the stock, even one can buy at these prices.
Kunal, Pranjali from Kolkata has Bank of Maharashtra 25 rupees per share, Federal Bank 128 rupees per share. Wants to know whether she should add some more of these counters in the portfolio or wait for correction.
Yeah, you should look to add, but then of course waiting for correction. A 5% correction should also be a modest zone where you can look to average.
Okay, Rajesh, your advice on Dreamfolk Services. Parvinder Singh wants to know good time to invest with a 8-month time horizon.
See, it's corrected quite a lot after the result. One can hold.
One more coming your way, Rajesh. NMDC, Chandrika from Mysore wants to know, can she look to buy this one for the long term?
Yes, one can buy. The valuations are attractive.
Okay, Kunal, Ravi from Vijayawada wants to buy Nifty October call options. Please suggest Nifty targets for the short to medium term.
20,000 call option is what you can look to buy if I'm bullish on the index for that time frame. But of course, you can look to buy at the money strikes for the index.
Okay, Kunal, this one's from Anu from Gurgaon wants to know about for a target for NBCC. Average price is 52 rupees per share. And wants to know BF Utilities can buy at current levels.
NBCC, my average target price would be closer to 70, 75 for the stock from a medium term play. And for BF Utility, you can look to buy on dips, not at current levels.
Okay, Rajesh Pavan Kumar holding 100 shares of Lemon Tree Hotels just from a price of 18 rupees. What to do in this particular name? He's a long-term investor. Stay put or book some profits?
Yeah, I think one should put profit. The prices have overstretched fundamentals.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Rajesh, as always, for joining us on the show, giving us your take on what reviewers do when it comes to their holding. And also, once again, on behalf of the entire team at Buy Now Sell Now, happy Teachers' Day to both of you all. But with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. So it's a goodbye from Shrishti, myself, and the team that put the show together. But stay tuned. Markets at Noon coming up next.